So, good morning. I will discuss the continuation of the report. So, the summary of the computed data. Meron dito na David Corporations and Dean's Corporations. Data sell inventory niya na 36 days sa David Corporations and 16 days sa Dean Corporations. Nakuha siya dun sa computation kanina na day to sell inventory dito na 36 days then 16 days. Tapos, yung collection of period niya na 24 and 12 is yung collection of period niya ni David Corporation is 24 days and Dean Corporation naman is 12 days. So, operating cycle nga is pagpaplasin lang yung days na yon 36 plus 24, merong 60 days na operating cycle si David Corporations and 28 days naman si Dean Corporations. Less payment period na 64 kay David and 30 naman yung kay Dean Corporation. Nakuha rin siya dito sa computation kanina na payment period 64 days and 30 days. Then, pag maminusin lang yung 60 and 64, meron ng net cash cycle na unfavorable si David Corporation na 4 days, then and Dean Corporations na 2 days. So, the negative net cash cycle of 4 days and 2 days for David Corporations and Dean Corporation respectively indicate the number of cash is available before payments to creditors are made. So, sinasabi lang dito na yung nire-represent lang nitong computations kung gaano kaikli mahawakan ng isang corporations yung pera bago magbayad sa creditors. So, dun sa computation natin kanina dito sa summary of the computed data, mas maikli na mamahawakan ni Dean Corporations yung cash bago niya bayaran yung isang creditors. So, Dean Corporation is more efficient in managing its operating cycle because it has shorter operating cycle days. This explains why Dean Corporation was able to pay its creditors in 30 days and avail of the 3% discount and offer by its merchandise suppliers. Dean's operating cycle is shorter because its inventory turnover ratio and receivable turnovers are higher. The higher the turnover ratio for inventory and receivable, the better it will be for the business. So, dito naman sinasabi lang na na yung Dean Corporation daw is meron siyang shorter operating cycles na advantageous siya. By having the shorter operating cycles, Dean Corporations was able to take the 3% discount offered by its suppliers for paying within 30 days. Yun lang yung sinasabi dito. So, next is the secondary liquidity and activity ratio. So, dito naman is yung other measures of business liquidity are also in use. Examples are the current ratio, quick asset ratio, or acid test ratio, defensive interval ratio, working capital turnover, and others as shown below and on the next page. Ito yung mga computation nila para makuha yung mga current ratio. So, current ratio equals current asset divided by current liabilities. Then, quick asset ratio equals quick asset divided current liabilities, or pwede rin siyang makuha as cash plus marketable securities plus trade receivable and current liabilities. So, the defensive interval ratio naman, para makuha siya is yung total defensive asset niya divide sa average daily expenditure. So, defensive asset technically the same as quick asset. 260 management reporting include cash, marketable securities, and trade receivable. These ratio are crude estimate of business liquidity. The higher these ratios, the better it will be for the business. However, having a very high current ratio, quick asset ratio, or defensive interval ratio does not guarantee that the business can pay its currently maturing obligation on time and avoid the problems involving the technical bankruptcy. So, dito naman, mina-highlights lang niya na yung the limitation of using liquidity ratio, such as the current ratio, quick asset ratio, and defensive interval ratio, as indicator of a business ability to meet its short-term obligations. While higher ratio generally suggests better liquidity, they do not guarantee that a company can pay its debt on time and avoid technically bankruptcy. So, the next one is the working capital turnover is a measure of management effectiveness in suing the working capital to generate sales. Precisely, the working capital is used to produce sales. The higher the working capital turnover is, the better it will be for the business. However, in case of an expanding industry where the companies endeavor to increase their sales and market shares, an increasing pattern in working capital ratio may indicate the normal business operation is under capitalized and needs additional infusions of working capital to effectively complete in maintaining and increasing the market shares. Ito namang paragraph na to, parang ini-introduce lang niya yung working capital turnovers, which measure how effectively management utilize working capital to generate sales. So, yung working capital comprise of current asset minus the current liabilities. So, the higher working capital nga, turnover ratio indicates a company is effectively utilizing its working to generate sales. So, once na nga yung may higher tayong ratio, parang mas maganda siya sa isang business para makatulong sa sales ng company or para tumaas yung sales niya. Once na meron daw tayong mataas na ratios, mas maganda siya sa business natin. The financial leverage ratio. A lever is an instrument used to move a bigger object. In finance, the object to be moved and made bigger is the shareholder's equity. The greater the shareholder's equity is, the more wealth the organization has. The lever of the shareholder is equity is debt. So, dito nga sinasabi lang na yung kung sino yung may greater shareholder equity, mas maganda yung organizations. Parang mas matutulungan niya yung organizations or yung business para magkaroon sila ng mga sales. So, financial leverage refers to use of debt to increase shareholders' equity. Using debt to finance business activities will bring greater exposure to financial risk. The more leverage the business, the higher the financial risk. Financial leverage is measure of risk. The following are leverage ratios. So, ito yung computations para makuha yung mga debt to equity ratio. So, debt rate equals total debt divide total asset. So, debt to equity ratio naman is total debt divide total shareholders equity. Then, equity multiplier equals total asset divide shareholders equity. Or pwede rin siyang makuha ng 1 plus debt divide equity ratio or 1 divide equity ratio. Time interest earned naman is equals earnings before interest and taxes divide interest expense. So, interest expense divide interest expense siya. So, financial leverage ratio naman para makuha siya is EBIT or yung earnings before interest and taxes divide interest expense minus preference dividends before tax. So, yan lang yung mga computation na gagamitin mamaya sa mga problem na makikita natin. So, the higher the debt rate or the debt equity ratio, the more leverage the business is, the more debt is used to finance and investing and operating activities. The higher the risk of insolvency, the higher the financial risk, and expectedly, the higher the return on equity. So, dito, parang ganun lang uli. Once na mataas nga yung debt rate natin, di mataas din yung equity ratio natin. Yung return ng equity natin. Parang ganun lang yung kung mababa yung ano natin, di mababa rin yung balik ng equity natin. So, equity multiplier gives an idea on how many times the owner's equity is increased. So, yung equity multiplier, siya yung nagbibigay ng idea sa mga owners kung nag-i-increase ba yung equity nila or kung ano nangyayari sa mga sales nila or yung equity nga nila. So, the number of times interest is earned measured along the long term available of the business to meet interest payments. The higher the times interest is earned, the more profitable the business is, and at the same time, the more capable it is meeting interest payments. The higher the interest earns, the more the business should use to debt finance its activities. So, parang ganun lang ulit dito sa pangalawang paragraph na kung saan once na mataas nga yung parang kagaya kung mataas yung debt mo, mataas din yung equity mo. Dito naman, once na mataas yung na-earned mo na time interest, mataas din yung mapupunta sa'yo na finance. So, also the effectiveness in using leverage may be positive or negative and may be measured by comparing the return on equity and return on asset. If the ROI is greater than the ROA, the enterprise has a positive leverage and uses debt to maximize the wealth of the owners. So, yung paggamit nga ng financial leverage is pwede siyang mag-negative or positive. Kasi hindi naman natin masasabi kung palagi bang mataas siya or ganyan. So, yung financial leverage natin, pwede siya mag-positive or negative. Once na mataas daw yung ROE natin or return on equity kaysa sa return on asset, meron tayong positive leverage. So, gearing ratios measures the financial risk of a company financial structures. Business risk can be calculated by calculating a company's operational gearing. Therefore, our two gearing ratio, the financial gearing ratio and the operating gearing ratios. The operating gearing is the same as the degree of the operating leverage. So, the financial gearing ratio or FGR can be calculated is one of the following ways. So, ito naman yung paano natin makukuha yung FGR or financial gearing ratio. So, dito is sinasabi na para makuha siya is FGR equals prior capital charge divide equity capital, or pwede rin siya makuha as prior capital charge divide sa total capital employee. Prior capital charge is a capital employed in the business which has the right to receive interest on preference dividends before an distribution is made to ordinary or common shareholders. Examples are preference shares, interest, bearing long, term capital, payable, long-term bank loan, and interest bearing short-term debt capital. In alternative calculation of prior capital charge, the interest minus bearing short minus term debt capital may be excluded. So, ito naman prior capital naman siya is yung makukuha siya as a capital employed ng isang business na kung saan ang rights niya is to receive the interest on preference dividends. So, equity capital refers the interest of the ordinary shareholders, including that one of the share capital, share premium, and returned earnings. Total capital employed is the sum of non-current asset and net working capital. So, ito na yung sinasabi kong problem na makikita natin yung mga computations dun sa diniscuss ko kanina. So, ito, financial gearing ratio. The following data were extracted from the records of GR Corporation as the end of 20 CY in thousands. So, dito may fixed asset tayo na 20,000. Then, current asset na 12,000. Trade creditors na 4,000. Bank overdraft na 500. Bills of exchange na 1,2. Loans na 4,3. Then, 2,000. Total asset less current liabilities is pinag-plus lang yung 20 at saka yung 2,000 is 22,000. Then debentures na 12,000. Bank loans na 4,000. Then 16,000. Provision of liabilities na 800. Deferred income na 200 and 1,000. Shareholders equity natin na 5,000. So, preference shares natin, meron tayong 1-2. Ordinary shares natin, meron tayong 2-5. Share premium 400. Revaluation surplus 400. Returned earnings na 500. Then, shareholders equity na 5,000. So, ito na yung una natin kukumputan. Required, determine the financial gearing ratio solution. So, ito naman yung hinahanap dito is yung financial gearing ratio niya. The prior capital charge is computed in two ways as follows. Ito yung preference, makikita dito natin yung benchmark and alternative. So, meron tayong dalawang column. Then, yung preference share natin na 1-2 is nakuha siya doon kanina sa given, dito sa given na preference shares na 1-2. Then, lalagay natin siya sa benchmark and also sa alternative. Debenture natin na 12,000. Doon lang rin siya nakuha. Doon sa 12,000 na yon. Then, alternative 12,000. Long-term bank loans natin na 4,000. Alternative 4,000. Nakuha lang rin siya dito, 4,000. Ito yung bank loans natin. Short-term loans na 4,300. Ilalagay lang natin siya sa alternative natin. Then, bank overdraft natin na 500. Then, prior capital charge natin, ang sagot natin sa benchmark, once na pinag-plus natin yung 1-2 plus 12,000 plus 4,000 is 17,200. Then, sa alternative naman natin is 1-2 plus 12,000 plus 4,000 plus 4,300 plus 500 is 22,000. So, the equity capital charge is calculated as follows. So, ito na nga yun, yung kanina, yung ordinary shares. Meron tayong ordinary shares na 2.5. Doon lang rin natin nakuha sa given. Yung share premium natin na 400. Revaluation surplus natin na 400 din. Returned earnings natin na 500. Then, yung total na 3.8. So, ito is sa given lang din natin siya nakuha. Doon sa given na pinakita ko kanina. Then, total capital employed is 22,000. The total asset less current liabilities. So, sinabi ko kanina yung paano natin makukuha yung financial gearing ratio niya. Pero, ito yung una natin. Yung FGR equals prior capital charge divide equity capital. So, itong 22,000 natin, nakuha natin siya dito sa alternative natin. Ito yung tinatawag natin prior capital charge. Then, divide sa equity capital natin na 3.8. Ito yung 3.8 niya. Then, i-divide natin 22,000 divide 3.8 is 4.79%. Then, yung other way naman is prior capital charge divide total capital employed. So, atong benchmark natin na 17,200. Then, di-divide natin sa alternative natin na 22,000 is 0.78%. So, ito na. Financial statements analysis limitations. Financial statements analysis at its own share of limitations. Some of these limitations are follow. So, yung financial statement natin, meron siyang mga limitations. Ito yung una niyang limitation. Industry ratio differences. Ratio have a great disparities from one industry to another. This drive seen financial analysis to specialize in few industry. So, itong natin, ito yung una nating limitations, yung intern. So, industry ratios. Ratios can vary significantly between industry to difference in business models, capital structures, and operational dynamics. Financial analysis often specialize in specific industries to better understand this unique characteristic and accurate interpret financial data. So, market dynamics. The economic and business environment keep on changing. Prices, inflation rates sometimes significantly change from one period to another. This make the old rule of thumb guidelines for analysis obsolete. So, ito market dynamics natin. Ito naman yung environment natin na kung saan nag-change tayo ng price ng isang product. Once na parang naging in demand na siya, parang magtataas tayo ng presyo. Then, parang makaka-affect siya sa mga customers natin na kung saan baka hindi nila matangkilik yung product natin. So, naging limitation siya kasi parang yung magkakaroon tayo ng problema sa sales natin once na patuloy tayong magtataas ng price sa isang product natin. Diversity in GAAP. Also, the availability of many generally accepted accounting principles contribute to inconsistency in methods used from one company to another. An industry to another. Accrual accounting allows to use estimate in financial measurements such as bad debt expenses, depreciation expense, amortization, warranty expense, contingency, to name a few. So, ito namang diversity in GAAP is the existence of multiple general accepted accounting principles can result is inconsistency in financial reporting methods across company and industries. So, pwede siyang maging magre-result sa financial reporting methods niya sa isang companies and industries. The next one is so that's all. Thank you.